So it's absolutely crazy how everybody on Wall Street all of a sudden thinks the bottom is in. Well, it's because they never heard of a move too, guys. Okay, so everybody's celebrating today because they see a few green candles and they're like, yeah, we're going higher. The worst is behind us. We're never going to fucking drop again. Fed is going to save us. Hey, the tariffs, they're going to cancel all this shit out. There's no way they're serious about it. Like, the market just doesn't fucking get it. Even if you take the tariffs out, okay? There's some wild shit that's happening in the market that nobody's paying attention to, okay? And that is the fact that bond yields are going to the fucking moon in the last 2 days. And what does that mean? Why bond yields going higher? What relevance does it have on the market? Well, bond yields should not be going higher, okay? For comparison purposes, the last time we had recently in recent history, or if you study all the other instances, normally when the market sells off in a profound way, bonds go higher. Okay, because it's like a natural safety play. But what's happening in this big 20% drop is bonds are going higher just a little bit. Okay, and yesterday we had a major black candle formation. Guys, you can go in stock charts and check it out. If you plug in TLT, you're going to see major black candle formation. And why is that happening? Why all of a sudden the bonds are reversing? Well, as you know, bonds have a very simple correlation with bond yields. Yields go higher, bonds drop. Interest rates go lower. Typically, what happens? Bond yields go lower, but that's not the case, and that hasn't been the case since September. Okay, so the major shift in the correlation is, I would say, is the very fact that's about to kill the market and cause it to go lower. Okay, so I'll walk you through exactly how this is going to play out over the course of the next 7 days. Okay, so normally lower rate cuts are associated with market going higher. Okay, normally, that's the normal correlation. Oh, Fed is going to come to the rescue. They're going to cut the rates. Everything's going to be great. Market's going to fucking go back up. No, not if the root of the problem, okay, not if the Federal Reserve is cutting the rates because it is acknowledging a major economic slowdown. That's not the kind of rate cut that leads to the market. Now, you could clearly get a bounce on weak volume like what you're seeing today in the market. But guys, by the time I'm probably done recording this, the market's going to start fucking reversing. It is a move too. When you see low volume bounces like this, what do? Short the fucking bounce if you want to make money. Don't be blind. Don't be listening to all these Wall Street retards. Just 10 days ago, these fuckers were telling you that their end year target on the market is 6,500, 7,000. 3 days later, they're fucking reversing it by 20% lower. These guys, they don't fucking know what they're doing. It's amazing how some of these fuckers even have a fucking job on Wall Street. They're absolutely fucking clueless. They don't know the charts. They don't know the 30 market moves. They're fucking doing this blind. And then they're like, oh my God, we're shocked. What the fuck are you shocked about? Stagflation. It's 100% outcome of a market drop of at least 50%. Just that's your fucking base case. Some of them still don't believe in the fucking stagflation, even though it's fucking apparent to a 5-year-old at this point. So hear this out. This is the most important thing that they're neglecting right now. So normally, when you have such pressure and overwhelming pressure on Federal Reserve to cut rates, okay, it could actually end up doing it. But instead of the reaction that everybody is expecting, which is market bouncing higher, okay, it may bounce just briefly, just kind of like the bounce you saw yesterday, right? We went up 400 points, lightning fast because of fake news on tariffs, and then we lost 300 points within moments shortly after that. So that was a great entry, guys. If you traded with me yesterday, you know how much money you fucking made on that short and that bounce. But guys, it was fucking insane. So listen, what I'm trying to tell you, exactly the opposite is about to happen from what everybody is expecting, because they're not looking at the correlation being broken. The normal correlation between bonds and bond yields is broken, okay? So what you're going to end up getting is Fed will have an emergency meeting this weekend. So probably on the 12th or 13th of April, Federal Reserve will meet. And the reason why it's going to meet, because by this Friday, the market is going to be setting a new low. So the low that was set over the weekend, Sunday night was around 48.50 on S&P 500. I'm saying by Friday, we will absolutely break this low. And I'm telling you this, while the market is trading at 5,300 and everything is looking extra fucking lightning green here. It's green, green, green. So I'm telling you that from 5,300 here, by Friday, we're going to be under 48.50. And the reason why that's going to happen is because yields this week are going to continue higher. The main reason yields are going to continue going higher is simple. You currently have a debt to GDP ratio of 7%. Now, you don't hear Warren Buffett normally talk a lot about these ratio, but it is one ratio that even Warren Buffett pays attention to. And the reason why I say even Warren Buffett, because he is known to be a long-term investor. And I'm using one of the metrics he's using, for short-term trading. So that's how much of a shock it is. Warren Buffett began selling a ton of stocks when debt to GDP ratio hit 4%. He started unloading Apple, a lot of positions, which was very contradictory with the rest of what the rest of the market was doing at the time. So now the debt to GDP is 7%, and my bet and my calculation is that debt to GDP is going to double in the next 4 to 5 months, meaning the debt to GDP could absolutely skyrocket from 7 to 14%. Now, what that means historically, you're guaranteed 100% outcome that bond yields will absolutely fucking skyrocket. Now, everyone in the market right now is expecting exactly the opposite of that. They're expecting bond yields to go lower. Well, I'm saying bond yields are they're gonna go to the fucking moon. Okay, and that means bonds are going to fucking collapse. And bonds collapsing, yields running to incredibly high level within a very short amount of time cannot be a good thing for the market. So when you see bond yields fucking flying to the moon, guess what's going to happen? Do you think stocks are going to go higher? Fuck no. Do you think, Bitcoin is going to go higher? Fuck no. Do you think other market components like oil and copper are going to go higher? Fuck no. So what we've been doing while the rest of the world, all of a sudden, oh man, the bottom is in, everything is groovy, we're going to go up from here. While the rest of the world is mesmerized into focusing on shit that's not even important. What they should be focusing on is the big picture. And the big picture is bond yields have absolutely no way to go but higher. And if you use that as a base case, which by the way is time proven, if you look at all the historic stagflation situations, bond yields are absolutely going to go fucking higher. Bond market is going to probably break under 84, which we have not had in years. And it's not a shocker. Nobody believed oil was going to break below 4-year lows, but yet not only it broke below that, but it's now trading under that level for 3 days in a row, which means oil is going to go way the fuck lower. The last time we had a 25% move in copper, which copper is an indication and a barometer of economy, world economy, I would say. So it also tells us that these are crazy wild conditions, and copper is not stopping today. Guys, we put on a big position on copper futures, utilizing options, big short positions on oil futures, utilizing options, guys. All of these positions will absolutely be paying out huge in the event of higher bond yields and proof of economic slowdown. So what could be a better proof of economic slowdown than actual Federal Reserve making an emergency meeting this weekend and saying, hey, we got it. We got to fucking help the market out. We're going to cut the rate in an emergency meeting. And if that actually happens, guys, I'm assigning like a 50-50 probability to that. But, if I'm correct about the market setting a low, the max point of pain this Friday, what that really means is the probability of that going into the weekend of a emergency federal rate cut decision is going to be very elevated. By the weekend, I mean, that probability could go up to 70-80%. By Friday evening, Friday 4 p.m. when the market is breaking below 58.50, 48.50 to the downside. Okay, so with that, when Federal Reserve will be recognizing their mistake and admitting to the major economic slowdown by announcing this rate cut, okay, I think we're going to get even a bigger move in the direction opposite to what the market is expecting. So the market's going to be expecting on that decision for the markets to pump and go higher. I'm saying exactly the opposite is going to happen. So all these trades that I just mentioned, they're going to pay out ridiculous amount of money. So if you want to trade it on the right side, if you really want to stop listening to these Wall Street fools who got absolutely everything wrong in the last 2 fucking years, okay, I mean, just answer one fucking question. Did you buy calls this morning because you saw green candles? And then look at the end of the day and answer a very specific question. Did you get fucked on buying those calls? Okay? And if the answer is yes, then there's only one outcome you could be doing is you got to change your fucking strategy now. You got to stick to the 13 market moves way, 13 market move strategy. Don't be indulging in this short-term bounce and use them as a money-making opportunity to short the fucking market. It's that simple. So the only thing you should be doing is taking all the 13 market moves courses, get in touch with the coach today. Don't fuck up these multi-million-dollar trades, guys. This is your moment. This is your chance. There are moments in the market when the market is focusing on so much noise that it shouldn't be. It creates an easy pathway for you to lock in some insane gains on very simple trades, guys. So do it the right way. Trade it with 13 market moves. Let's roll.